The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1. Where does the allocation of funds happen right now?
And it'll go exactly where you want it to go. The next bit, after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Hello everybody, welcome back to another webinar. Hello Murad, hello everyone, welcome. My name is Amy and I am going to talk about behavioral finance today. I'm just going to share my handout with you. Wait a moment. Let me see, exactly this one. So you can see my screen, isn't it? Yeah. Okay. All right. So let's get started. As I said, as you know, I do focus on that particular niche, trading psychology, because I think it's a niche that usually gets neglected quite often, or people talk about trading psychology in a very random, superficial way, right? They don't cover all the details that are necessary for you to improve your basically behavior, right? To improve your overall performance on the stock market. Today, I'd like to talk about a very important topic, which is the basics of behavioral finance. But let me already clarify one thing. I'm not going to summarize the basics of behavioral finance. This is not a lesson about the basics of behavioral finance in a traditional way, but I do want to talk about the basics of behavioral finance in the context of trading. That means we're going to learn the whole lesson, the whole webinar is based on a case study. That means we're going to have a closer look at a real chart, yeah, GBP USD, and then we're going to learn what aspects of behavioral finance can we actually apply to our everyday trading. And I think this is more important than just, you know, me summarizing the basics of behavioral finance, because if you're so interested in economics, you could basically open up a book and just read, yeah. So that's the reason why I do want to focus. I actually want to focus on one special aspect, which is the decision-making process, right? That means by the end of today's lesson, you know more about how the decision-making process is happening, and also you will get some, you know, tools or some strategies how you can actually improve your own decision-making skills when it comes to opening a trade, managing a trade, and closing a trade. And before we start, I do want to clarify one thing. Now, ignore the numbers here, 90% and 10%. Ignore those numbers. I'm not a neuroscientist. I don't know. It could be 80 to 20. Doesn't matter, right? What we can see from this graph here is already that the subconscious mind accounts for a great deal of actions. Usually 80%, 90% of your actions depend on your subconscious mind. So I do want to clarify, before I start with anything, I want to make one thing clear. It is absolutely a scam, and it's absolutely wrong when people say, well, look at here, I've got a trading plan for you, which is very objective and based on, you know, the logic, just based on logic, yeah? Because there is no such thing existing. You can't say this trading plan is so objective or is more objective than mine, etc. And that's not actually the solution how you can improve your trading performance, because you have to work with those elements, with those sub-elements of the subconscious mind. If you ignore those, you will never be successful. That's guaranteed, that's for sure. Now, what I have also prepared for you is, as I said, I'm going to present to you a case study based on that, because last month, when I had my webinar, someone said, and which I think is a very good, which was a very good input, someone said, why don't you come up with, you know, with a real trade, or why don't you show how we can apply those tools that we learn in trading psychology to a real chart? And fair enough, that's absolutely right. And that's the reason I prepared a case study today. And we're also going to have a look, or I'm going to show you some glimpses of my own trading journal and show you what you can actually transfer and copy to your own trading plan. I'm not going to share my trading plan with you, yeah, but I do want to show some aspects every trading plan absolutely need to have, all right? So, yeah. Now, before we start, let me clarify another thing. Now, when we talk about behavioral economics is trading psychology, and it actually it belongs to that part here. It belongs to microeconomics, and as I said, it's trading psychology. Behavioral economics basically analyzes or gives you analyzes how decision-making processes are made, how people or why people act the way they act, right? This part of economics is more about how you should act, right? And microeconomics, when you talk about behavioral economics, you talk about how people actually act, you understand? So you have all these theories how the market should act, or how participants on the market should act, and you know, and behavioral economics explains to you how you're actually acting, out of what reason. And if you are aware of these decision-making process, I can't promise to you that you'll become a very good trader overnight, but the more you become conscious about this topic, the better you can actually tackle your real problems you have, and the better you understand where your real problems are. You understand? And this is a very an interesting field of economics, because you have all these different fields of, you know, psychology and judgment and decision making and economics combined in one. And yeah, so before, as I said, today's program is based on a case study, or I just call it a case study. It's based on a real chart. This is GBP USD, the daily chart. Now, I want to show something very interesting to you. Now, this is a screenshot I took on Monday, right? 86% of people were looking for buying opportunities, while I was looking for selling opportunities, by the way. Yeah, 86% on Monday. Now, watch out. On Tuesday, I took another screenshot. This shows 89% of traders are looking for buying opportunities, all right? So we've got 86%, 89%. This was Monday, Tuesday. Monday, because we had here on Friday, this candlestick, the red one, the thick one here, right, where it says 3. This was the candlestick on Friday. This was an introduction of a breakout, and people were probably assuming this could be a fake out. So let me just, you know, buy against the overall trend, and let me just start looking for buying opportunities. No matter what your reasoning was, this is not called a strategy. This is called gambling. This is not, you can't say, well, my strategy is a bit different. Well, let me tell you one thing. We were up here at 30, right? 1.30. Price is now down at 1.25. That's not a strategy. That's not a strategy for you as a small trader with a small account, but that's also not a strategy for anyone out there who calls himself or herself a hedge fund manager or whatever. That's not a strategy, all right? First of all, that one, to make it very clear, because it makes me quite upset sometimes. So this is a screenshot I took. It was on Monday. 86% of traders are looking for buying opportunities based on the idea that I just explained. Now, first of all, when we have this chart, I'm not going to discuss the trade or whatever. I want to explain something, because later on I want to talk about some strategies you can actually apply in order to avoid situations like this one. And if you have lost a lot of money today, for example, that was predictable, guys. That was absolutely predictable. And I'm also going to show you what I mean in a bit. Now, first of all, what we can actually see here is that we've got a strong, reliable support zone. I'm saying strong support zone because it was a well-respected one. Well-respected means it got tested several times. 1, 2, 3. And each time we had a bounce off. Price bounced off this support zone. And the interesting part about this bouncing off is every time price bounced off, we had a lower high, plus the bottom, the dip here, or the fundament is not very clean. Here we've got a higher price, and then here basically a lower. That already shows that the fundament of our house, of our building, is not a clear cut. You understand what I mean? Then on the other hand, right, what we have is a well-respected downtrend, a well-respected one, because it also got tested several times. 1, 2, and when we had this third testing, 1, 2, well, 4 times. 1, 2, and then the third time, this was the introduction of, or this was the candlestick that violated the support zone, right? This happened on Friday. Now you are all left alone with judging this scenario. You have a scenario that tells you this could be a fake out, but it also tells you, well, this could be a real breakout. You're now all left alone with judging this scenario. There is nothing objective about judging something like that, all right? Because always when it comes to judging and decision making, always you will have your own experience, etc., in the back of your mind, which is going to interfere with the logic. That's going to happen automatically. You understand? So that means we're all left alone. We're sitting all in the same boat. We're all left alone with this scenario. We now have to judge what to do on Monday, right? Now, the funny thing is, as I said, this was Tuesday at 7 p.m. Here in Switzerland, it was 7 p.m. when I took this screenshot, and 5 p.m. UTC. So that means all day long, Monday, Tuesday, these people, right, 86%, 89%, these are real traders who had positions open, long positions open, right? So that means these people were buying. And as I said, that's not a strategy, right? I do understand the logic when sometimes people say, well, I have a different strategy. I basically, I don't know, whatever your strategy is, but there is no strategy such as catching a falling knife. That's not a strategy. You can't basically enter here where you are at 30 and price is now down at 25. You have already lost a lot of money. And that's true for small traders as well as for, you know, professional traders or hedge fund managers, doesn't matter. Now, the funny thing is, as I said, the funny thing is we've got the scenario that a major support zone broke. A major support zone, because this is a support zone dating back to 2020. It is a well-respected support zone, got tested several times. So people were assuming banks might, you know, start buying the other or the opposite trend. They may basically start looking for, you know, buying opportunities or buy, and then they were basically expecting that market price may take a U-turn, right? Now, this is something you could write on your paper. That's absolutely right. Yeah, you could write that down, but that's just one single argument, isn't it? Among all these arguments we have here. So that's just one piece of information. And don't overvalue fundamental analysis to your own, you know, traditional technical analysis, because who the hell are we that, you know, banks, etc., share important information with us? At the end of the day, we just get glimpses of their decision-making processes or of their decisions, right? We just see some small pieces of information. It's not, you can't basically say this is a more important idea to basically think that banks may start buying now. You understand? This is just, as I said, that's not a strategy. Now, the funny thing is that, or let me ask it, or the question here is, what makes you take such an irrational trade? Monday, Tuesday, probably also on Wednesday, you just keep looking for buying opportunities, yeah? And you can't stop. You can't stop yourself from, or you can't basically, if you are in a losing trade, it's very hard to close it sometimes, etc. So what makes you act in such an irrational way? We're going to talk about these four aspects here I highlighted in yellow, right? These four topics that I do want to cover to bring some clarity, or to bring some, you know, explanation that may be useful for you. If you participated last month, we talked about greed. I don't know if you were there or not, but we said I gave you a new definition of greed. And today I do want to give you a new definition of fear. Greed does not mean wanting more or whatever. I mean, I don't see anything wrong about wanting more. We're on the stock market because we all want to earn a lot of money, isn't it? And I don't think that this is wrong or whatever. I'd say greed is not knowing exactly what you're doing. What does that mean? And I said the most important component of that is you cannot open a chart without not knowing in detail what the chart looks like. You already need to know what the chart looks like in the back of your mind. When you close your charts, right, in the evening or whatever, when you are done with your trading session, you check the prices, you know where we are, etc. And then you go to bed or whatever, right? And then the next morning when you start your trading session, you already need to know what the overall structure is, what the important numbers are, what the important support and resistance zones are, where the important numbers are, etc. And if you don't know that, but you just open the chart, that is already gambling, because you're opening the chart, you see something, and that is going to shape your mind already. You understand? There you have the problem. So that means before you open, you already need to know these things in the back of your mind. This was our definition of greed last month in our webinar here on A1 Trading. Now, let me give you a new definition of fear. Fear does not mean that you are so scared to lose money or whatever. It could, right? It could. But usually fear means, or fear involves three important aspects. First of all, that means you have no idea what your risk-reward ratio is. If you want to calculate your risk-reward ratio, here you'd have, this is something you could basically apply to your own trade. This is a trade I took on Monday, right? This is the chart. Here that was a trade I took on Monday. I entered at 27,608, right? 27,608. This is the trade I opened. And I always make sure that I know, I mean, the one aspect is the risk reward ratio. If it's below 1, I know that this is a risk I want to take because it is basically, you know, a profitable trade, or it is a trade that makes sense when it comes to risk reward. That's one thing, but that's just an aspect, right? This is just one element of how to overcome fear. That's one thing. Another thing is, because if I know, for example, oh, I have no idea, I always write down where my stop loss is, right? If I don't know where my stop loss is, or if my stop loss is just not, you know, if it's just irrational, if it just, or if I already see that I will lose a lot of money, it just doesn't make sense for me to open a trade, because that means for me that this may be just not a very good entry. You understand? So that's one aspect. Plus, but just saying, oh, every time I calculate, just saying every time I just calculate risk reward and then take a trade, that won't do the trick. That's not enough. You have to take into consideration some other aspects, such as the question, what is actually likely to happen? Now, my question to all these people who were looking for buying opportunities on Monday and Tuesday, what were you expecting? I mean, we were here, right, at 30 something, and we went down all the way to 28. So my question is, as you can see, or my question is, what were you expecting? Were you expecting that Monday would be all of a sudden, out of the blue, unexpectedly, a bullish engulfing pattern? Or were you expecting a hammer, right? Even if you were expecting a hammer alone won't be enough to, you know, already start looking for buying opportunities. That needs confirmation the next day, etc. So the question is anticipation. What are you expecting for the next day, right? That means you always need to be busy anticipating. When you have the Friday candlestick, right? When you've got your Friday candlestick, the question is, what do I expect for Monday? What is likely to happen is the very question. What is likely to happen? Create multiple scenarios. For example, this is something I always do, ABC, and then I create, you know, different scenarios in the back of my mind. What is likely to happen? What could happen? What am I supposed to expect from my trade, etc.? So have always multiple scenarios. And this will also help you not to focus on candlesticks alone, or not on indicators alone, etc. This is a very useful tool that helps you to overcome this fear of, you know, losing a lot of money or whatever. The third thing, and I'd say this is the holy grail of trading. I know it's a word used by scammers, right? When they say, oh, I've got the holy grail for you, blah, blah, blah. But let me tell you that time is something absolutely important. An idea that doesn't make sense at 9 a.m. in the morning may be a good idea later on in the afternoon at 3 p.m., right? That means the question here is, when do I enter a particular trade? And another question related to time frames, what I never understand is when people say, you know, what time frame is important. If you ask such a question, that just means you have never clarified. I mean, this question needs to be clarified on your trading plan, right? But another aspect of time is not only when to enter, but also where in the overall structure are we right now? That means if this is the candlestick I expect by the end of a particular session, right? By the end of a particular session, I expect the candlestick to look like this, for example. I create multiple scenarios. One of my scenario is this one here. All right. Oh, wait, where is it? Oh, here. Exactly. Is this one here. What I always ask is, I zoom out and I ask myself, where exactly are we now, right? Which part of this candle here, which part is actually being formed? Are we now are we now busy with the shadow? Are we now busy with the body, and what color? You understand? So the question here is, again, the overall structure, time in the sense of, or time frame in the sense of the overall structure. And that's an important theory of behavioral finance, that we sometimes, you know, when we are too much involved in one detail, we basically forget about the overall time frame, and we basically get so consumed by one small detail instead of the overall picture. So this can be very useful. These three together, the risk ratio plus what is likely to happen, together with the scenarios, plus the time frame and the question, where exactly are you right now of the expected candlestick, right? Where exactly are you? This can be very useful for you to overcome this feeling of fear. All right. Now, this is the emotional side. So as I said, or as I showed to you, when we talk of behavioral finance, one important behavior, one important behavioral part are always your emotions, right? Emotions. So it is part of your subconscious mind. So that means you need some tools for greed and fear or anger, etc. And as I said, we clarified greed, and today we clarified fear. Fear is not you're not sure whether to take a trade or not, but it's more about have these tools ready, that you know something about risk reward, and then this one and this one right here. I'll come back to this one later. Now, a theory in behavioral finance talks about the framing, the so-called framing effect. Framing effect means depending on what frame you give a piece of information, or how you frame an information will actually influence what action you are going to take. That means, for example, let's go back to our case study here. I could have ignored these ones absolutely, or I could have ignored these ones absolutely, right? That means the way I present an information, the way I see something, if I don't, or let me say it this way, if you don't see a piece of information from different angles, you will be misled in most cases. That means always, if you have a piece of information, check and recheck it, or something, a trick I always apply is I compare it to higher time frames, for example. Yeah, that means does my trade make sense in the overall context? Yeah, this is also a topic I have just mentioned here, scenarios and where exactly are we. And the framing says, you know, it depends a lot on how you present a particular piece of information. As I said, when it comes to taking a trade, make sure you have multiple, when you are on the hourly level and you're looking for an entry point, check it with the idea of higher time frames in order to see whether whatever you can see, whether this makes sense on higher time frames as well. Another thing is, I'd say, which is slightly even more important, is applying the framing effect we know from behavioral finance to the very important concept of weighting, right? You all know, as day traders, weighting accounts for, I'd say, 80% of your job, isn't it? And the problem with weighting is that most people misunderstand what weighting really means. Weighting does not mean sitting there and just staring at your chart and looking desperately for entry points or whatever, and checking and rechecking your strategies, etc. It doesn't mean that. And waiting does also not mean missing out on good opportunities. And waiting for sure does not mean just closing your charts and doing nothing. That's also not waiting. That's just being lazy. That has nothing to do with the waiting. You yourself, you have to make sure that you give waiting a new frame. And that's the reason why framing is so important in this context. Look, waiting makes, let's say, 80% of day trading, right? 80% of day trading consists of waiting. That means if we had a job description, right? If we had a job description, it would say we're looking for someone who's able to wait. That means this is a key element of day trading. I think we all agree on that, don't we? The problem is, in real life, we don't have a reference for that. If you were a nurse or a doctor in a hospital, would you recommend to people, well, if you can wait, you can climb up the career ladder? No. In any other job out there, waiting is usually not a key factor, is not a key element for you to become successful in your job. That's the reason why we day traders struggle a lot with the word waiting, right? And that's the reason why most of us basically have no idea what to do while waiting. And that's the reason why we then basically take, miserable trades and lose money, whatever. So do you understand? Waiting is a key concept, whereas we do have to reframe the word. We need to give this word a new word in order to make it for us clearer. Because as I said, we don't have a reference in real life where waiting plays a major role in order to become very, very successful, right? In order to succeed, we need to wait as day traders. So you could basically replace it. Yeah, replace the word by something you're very good at. That means give this waiting a new shape, a new wording. Don't call it waiting, but call it something else. For example, me as a lecturer, as a teacher, one major part of my job is basically preparing all the lessons, etc., preparing things meticulously for my students, because you want them to understand the concepts you present to them. So that means what I understand now as a day trader, what I understand when someone says waiting, for me waiting means preparing meticulously. I just basically replace the word in order for me to understand what my job as a day trader is. Because you may be now laughing and thinking, why do you emphasize this word so much and why do you keep repeating? But I say, well, it's a hypothesis, I'd say most people would be much better at trading if they were able to wait, if they really understood the concept of waiting. And as I said, you're all very good at something, right? Take that field and then try to copy whatever is required in that field to the new or to the word of waiting, in order for you to understand what it requires for you to do as a day trader. Yeah, that's the framing effect in behavioral finance. Framing effect means, as I said, give things, reframe things, and see pieces of information from different angles. Another theory we have in behavioral finance is the sunk cost effect. And here, that is actually the very reason why we basically can't cut losses and less winners run. This is the very reason. The reason is, we always, whenever we trade, right? We as traders, we invest a lot of time, money, effort, energy, free time, relationships, etc. Right? We also we basically lose friends or whatever. We invest so much into trading that we expect a lot in return, don't we? And that's the reason why we get so frustrated about losses, because in a normal world, let's say you want to buy this pen, right? In a normal world, you invest money and you get your pen, don't you? In a normal world. Now, the problem is, for day traders, it may happen that it may happen that you invest money, but then the trade turns out to be a losing trade. So that means there is nothing in return. You just lost money, right? That makes us quite upset, because processing this or processing what happened is very difficult for our brain, because in the real world, right, our references are always, we give money, we invest something, right? You invest energy into something, you invest time, effort into something, and you basically get a reward, or you get a return. And this is not always the case in trading. Here, one trick you can actually apply is see it from the perspective of a higher time frame. That means you trade for a whole year. What is your goal, right? What do you want to achieve by the end of the year? What should be the result? And work towards this particular goal instead of being upset about trades. Well, yeah. And one thing for which I don't necessarily have a solution is you just need to be aware that the sunk cost effect in behavioral finance describes the very or the situation that what's gone is gone. That means you can do nothing to regain money that's lost. That means even if you get angry or if you get upset, it won't help. That means you need, I'd say this is quite difficult, it sounds very simple, stupid, but then when you are concerned and when you have lost a lot of money, you are quite upset and you are quite disappointed, aren't you? Here, what could be helpful is that you have your own tools, find some tools that help you to gain a certain distance. Well, but this doesn't mean that you should trade in an irrational way and then what's gone is gone. I just basically don't think about it. That's not the idea of it, right? You need to trade in a rational way, and then if every now and then it happens that you have a smaller loss, you basically can't, you just need to be aware that you can do nothing to regain that money. But if you are one of those traders who were looking on Monday, Tuesday, GBP USD, you were looking just for buying opportunities, and then you enter right here, price is down at 25, and now you're sitting there and thinking, well, what's gone is gone. Well, I can tell you that is not what it means, right? This does not mean, this is not a sunk cost effect. This just means this was gambling. This was even not trading. So the sunk cost effect just describes as a trader, you just need to be aware that every now and then you will have these smaller losses, and then you have to apply what's gone is gone, right? Otherwise, it just doesn't make sense. Now, the last part of today's program is about the trading plan, what every trading plan needs. These are actually my notes I took on Monday for the trade I just showed to you, right? The GBP USD. Now, what I want to talk about some elements on my notes. First of all, I think everyone out there, it doesn't matter what your trading plan is, always make sure you've got something like a timeline. Yeah, Monday, Tuesday, Wednesday, etc. For what are you asking yourself? Well, in order, and this is the reason why I said, if you traded GBP USD today and you lost a lot of money, this was actually predictable. It was predictable because on Monday and Tuesday, you had clear price movements, right? You had a very clear downtrend based on, and you could trade very well based on, candlesticks, etc. You had very good entry points and so on. But after 2 days of on Monday, we had an introduction of this structure, right, of the downtrend. And on Tuesday, the structure just went on. You can't expect the market to to apply the same structure every single day. Usually what you have is Monday, Tuesday, you've got a certain structure. Wednesday is usually a bit of a dodgy day. And then you've got Thursday, Friday, slightly a different structure. You understand? This may be different if you, this is true for Euro US dollar, this is true for GBP US dollar. I don't know, if you trade something else, it may be different. But observe your Forex pair, you may observe something else. But usually you have, you know, you have a beginning of a structure, you've got a beginning of a structure, a continuation, and then it gets a bit dodgy. And then you've got a second half of the week where you have, again, a bit of a different structure. You understand? So that means writing down the structure, or you know, visualizing the structure is going to help you a lot to understand the overall behavior of the market. That is very important for you. So I'd suggest everyone has that, and I'd also suggest that everyone starts creating multiple scenarios, right? Not just sitting there and seeing a candlestick pattern and taking a trade, but more about, you know, you see multiple scenarios, or you write down multiple scenarios, and then you reflect on these scenarios, what is more likely to happen. That's one thing I'd absolutely write down on my trading plan. Another thing is I'd always write down all these striking events. That means, for example, after, you know, concerning GBP USD, after we had this, let me show it to you, after we had, you know, the support zone broke at 28, so everyone knew that the next one would be 26.7 something, 790 or something. That means if that one breaks as well, that could mean that price basically is going to move down to 20 maybe next month. Nobody knows, but you know, these are not good. The question is always not only what can you see, the question is also what does that imply? What does that mean? What does that mean for tomorrow? What does that mean for next week? What does that mean for next month? And nobody says you're not allowed to think about next month already. And that's the reason. And while I am taking notes for a particular day, I already start thinking about next month, because this is the last week of the month. So you already start thinking about what could be important for next month. And the last thing, oh, I've already said that. And the last thing is always have your financial or behavioral goals on a piece of paper. So you know, because as I said, as a trader, you're automatically going to lose money, right? That is part of the game. You will lose money. That means what matters is the result at the end of, by the end of the year. That means what are your major goals for that particular year, right? Okay, I think that was it, to be honest with you. And let me see if you have any questions, because I just... Now, are there any questions, or is something not clear? Do you want me to repeat something? Or that was, oh, thank you very much indeed. Thank you. Yeah, so as I said, this was it. And I know it was quite fast, etc. But when you go over the webinar once again, you will probably see something new that you didn't know. But yeah, this is it actually. And I really, really hope you're going to work on the behavioral aspect a bit more. Usually, you know, as I said, trading psychology gets just neglected. People talk about it as if, you know, usually they just talk about it if they have nothing else to talk about, right? And I'd say trading psychology is such an important aspect. If you can't, if you have no idea about trading psychology, I am not quite sure whether you really understand what you're doing. The progress of educational journey for trade. What, in your opinion, trade signal stops? Wait a moment. Wait, I'm trying to understand the question. Stops the progress of educational journey for traders? No, I don't think so. I just think that you also need proper education when it comes to trading psychology. Trading psychology is as important as having a proper trading plan. It is as important. And as we know from behavioral finance, right, just knowing what you should do is not going to lead to the solution, what you're actually going to do. You understand? So yeah, so it's scientifically proven that you really need to focus on behavioral aspects as well. Yeah, fast. It was fast. Yeah, that's right. I'm sorry. Yeah, but I'm not uploading to YouTube. I'm just too old for that, and I just can't deal with social media generation or social media interaction. I don't like it, and that's the reason why I'm here on A1. Right, I come up with regular webinars on A1 trading every month. Great, but too much to absorb. Yeah, that's right. Yeah, that's absolutely right. Yeah, there is a lot to absorb because it was a bit fast. And as I said, you have now a new concept of greed. You have a new concept of fear. You also have new elements that you may want to copy to your own trading plan. And as I said, we talked about a couple of topics that were absolutely new. So I do understand. Yeah. Many mentors. That's right. That's right. There are a lot of mentors out there, and you just need to pick someone who you can actually trust. And A1 trading is for sure. And I'm not just saying that, you know, because I do these webinars here, but A1 trading is for sure a platform that you can trust. Absolutely. Yeah. How can we change the subconscious mind? As I said, I presented to you, changing the subconscious mind is the hardest part. And you really need to put effort and work into that. So that means, yeah, it will take time. It will take time, but you need to be disciplined enough to apply this again and again. And you know what a trick is that you can apply, and this is something I have applied to my own trading performance. I had a lot of problems or struggles with being patient, right? As I am also a lecturer, I started learning patience in my, or in my role as a lecturer. Then I just basically copied what I learned there to my trading. So that means in every field of your life, in every aspect of your life, you really have to train what you need for trading. Everything is trading. Your whole life is trading. Trading is not just limited to the stock market. Everything you do, when you talk to people, when you eat, when you do something else, it's always about trading. Have trading always, whatever you want to train, and whatever you need for trading, whatever weaknesses you have, train it in a different field and then apply it to trading. Yeah. All right, I think this is it for today. And yeah, as I said, if you have any questions, you can also just write them down in the comment section, and I try to answer your questions and make sure that we clarify all the or something I haven't clarified. But feelings, etc., and everything helped me out. I spent more time observing my trades and behavior. Yeah, exactly. Okay, that's very good. I had this also today on my presentation. Yeah, trading journal is something that is very useful. A trading journal helps you always. It's like a mirror, right? A trading journal is like a mirror. Without a trading journal, you are completely lost, yeah? And this is the reason why I showed a couple of notes I usually take to maybe inspire you to use certain aspects of my notes to your own trading plan, like with a time frame, yeah, with a time frame, the structure, draw the structure, visualize the structure to see where exactly we are, and with the multiple scenarios, etc. Okay, good. So thank you very much indeed for participating and for asking questions, for interacting. That's very interesting for me as well. So thank you, and hope to see you next month. Yeah. So take care. Have a lovely evening or a lovely morning, whatever, and hope to see you next time. Bye-bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.